We're back with episode 4, finally. I know it's been a while, but we're back. It's a brand new year, 2023. I hope everybody that's watching has had a good start to the year. I know 2022 wasn't necessarily the easiest year, so if you guys were trading from 2022, even if it was rough, take it as a learning experience. Tough times make good traders, so there was definitely a lot of lessons to learn last year. We're going to push through and keep refining our skills as a trader, and then when the next bull run comes, we'll be able to maximize profits then. But without further ado, let's jump into episode 4 of our futures trading account. So last episode we left off around $305, so I'll show you guys the trades we made since last episode, walk you guys through my overall analysis on SPX because that plays a big role in why I took the trades I did. We're just focusing on the fact that we're in an overall bear trend, and you can see we have a high here, a lower high, another lower high, and then this lower high. Okay, then if you zoom in, you can see that we were kind of starting to change the trend. It kind of looked like we were bottoming out, but then we broke down and we broke bear basically. Then we kind of formed like a bear flag, you can call this consolidation, looking for that eventual continuation lower, but we ended up actually surprising and breaking higher, which not a lot of people expected, but that's what we got. From this candle right after that ends up being this top wick, basically the most bearish candle you can get.
It don't go down.
Robert, it goes down.
No, it don't.
It do go down.
Oh! Don't.
And then followed by
It don't go down.
right after that. So overall it's a bit confusing, but if you just focus on the key zones and the key levels, it's actually not that bad, because if you draw this, you can say this was very clearly a resistance zone here. Well, actually it was a support zone, but then quickly after we broke down, and then it becomes a resistance zone, resistance zone, and then we break above it, kind of acts as support, and then we push up higher. So if you zoom in, we had this bearish day, but overall, if you look at the overall picture, we kind of we kind of broke down the support, which you could have got trapped here short. So we did break down below here, but we quickly recovered that, which was a good sign. So that's why it's not super clean, like, okay, we have this clear key zone, but you could have taken calls here and then you would have been stopped out, right? Because we eventually kind of broke below it. But that doesn't mean the trade is necessarily over, and that's what I feel like kind of separates beginner traders from advanced / professional traders. You entered a call here and then you get stopped out, right? That's whatever, okay? You're gonna lose trades. The overall thesis to go long in this area is the right thesis, right? In hindsight. But you very easily could have got stopped out here. The important thing though is to not completely discredit the bullish thesis, right? Like, even if we break down, there's still a possibility of recovery, and that's why you always have to be prepared for every scenario. So, you know, you could have very definitely switched bias here and switched to the bear side and played this, but then right away, once you don't get continuation, the ideal scenario here for a bear would be that we see something like, okay, so we see move down, access support, we break down. Oh, I messed that up. Hold up. Let me redraw that. Okay, so you come down, you bounce up initially, you break down, you come back, you retest, and you see that continuation. Seeing this level right here break down, that's very important to see, right? And then you could see continuation, but we didn't get that. So you could have entered puts here, but then once we failed to get that continuation and you start seeing these wicks and then you start seeing this big green candle, okay, that's your sign to exit. And then the really good traders, they would have flipped bias, they would have flipped back to bullish, and then caught the rest of this move, right? And that's why risk reward is super important, because let's say you entered calls here, right? Let's pull up this. Let's say that was your trade, right? And you had your stop loss around there, and that's your profit target, right? Let's say you entered calls here and you got stopped out, but you only risked what? 11 points, right? Which is actually a pretty wide stop. But let's say you risked 11 points. And then you entered puts. So that's one red trade, you're down 11 points. And then you enter short. So now you go to the short side. You had your stop loss there and you were trying to go for that, okay? So let's say then you get stopped out. Let's say you lose another 10 points. And at this point, you're down 20 points, right? And then you switch to the bull side again. You put your take profit there, and then you catch this, which is what, 47 points. Let's round it up to 50 points. So in one win, you made 50 points, and so in the total of the 3 trades, you took 2 losses and you took 1 win. In those 2 losses, you lost a total of 20 points, and in just that 1 win, you won 50 points, right? This is why it's extremely important for risk management, because when you come down to the zone, right, you don't know if it's going to hold necessarily, but you know it's a possibility, and it's a higher than 50% chance it will happen. And if it does happen, you can reasonably assume that we'll make a decent move here. Like, it'll be at least 20-30 points, right? And ideally, you'll come all the way up to this new high of day, right? So that's what makes a good trade thesis, the possibility of capturing a good move while risking only a little bit amount, because right away you would know if you're wrong on the long side. If you buy calls here and it breaks down, well, that's invalidating your thesis, so you stop out, right? And you lose 10-15 points max. But let's say this didn't happen and it just bounced off here, like it happens sometimes, then you would have made 30-40 points, or even more if you let runners, right? And that's why a lot of times traders will be like, well, I entered a trade and then it hit my 20% stop loss and then ends up running without me. Well, why didn't you re-enter the trade once it showed that it was going to move in your direction, right? Like, if you stop out a trade doesn't mean you can't trade now. You can't trade this trade idea. Sometimes it might take 2-3 times to catch the move, right? You might get stopped out 2-3 times before the move actually happens, right? All that to say is that, yeah, this is a key demand zone. Okay? That's all I wanted to say. It's the key demand zone. So we bounced off there. We come up here, we form another base, then we break out. This is a key pivot area here, so let's mark that. And then let's zoom in closer. So this is the action we actually want to talk about, because this is where the trades took place. So all this rant was, I just wanted to explain that, okay? Hopefully you took something from that. Okay, so we broke above this. So, okay. So this is my point, drawing all this. Coming into CPI, because this reaction here, this was caused by CPI. And going into CPI, I had a bullish bias. The reason I had a bullish bias was because we were looking bearish. We consolidated, looked like we were going to go continue bearish, but we didn't. We switched bias. We broke above. Bears had a chance to break us down and make this be a liquidity grab just to make us move lower. But bulls stepped in the next day just like they had to. So then, this was bearish. I was bearish during this. But then right when I saw them step back in, the bulls right in the area that they had to step in. Good job, bulls. We're back on your side. And we make this move up higher. So, and then, they continue doing what you want them to do. When you're a trader and you have a certain bias, like let's say you have a bullish bias, there's certain things you want to happen. Like, all right, let's take note of all the good signs from the bulls. Continuous green candles here on the 2-hour chart, great sign. They're riding the 90 MA, great sign. On consolidation, they're not pulling back more than 50%. So what do I mean by that? Okay, let's say you are a bear here. If you're a bear here and you get this move, this is peak, this is the low. If there's a push up, the max, you don't want to see it push up more than 50%. In this case, we end up pushing more than 50%, so that's terrible from the bears. Terrible job. You guys are not keeping price down, so that's that's not what you want to see as a bear. Here as a bull, you have the low and you have the high before a pullback. Did it pull back more than 50%? Nope. All right, great sign, bulls. Good job. Then we get this bullish engulfing sign, another great sign. You keep seeing these positive reinforcement, which keep you being a bull, right? At no point in this chart is this chart telling you to switch back to the bear side once we turned bull, right? Once this zone held and we became bull, there's no sign to switch. There's no reason, or there's no reasons here to turn back into a bear, okay? So come up here, test the zone. Bears had a chance to defend this zone. They didn't. We pushed right through. 3 really bullish candles here. Great sign, right? There's no reason to turn bearish just yet. So we zoom in closer here, and let's zoom in closer to where my executions take place. So here you have so this was the regular market trading hours. Then around 1 p.m. market closes. So this starts being the overnight session. So at this point, that's your peak, your high. Wait, you guys can't even see it. Hold up, let me. All right, so that's the peak. I drew this wrong. This right here is the low. So that's our low and the high for our overnight session. I always like to know where the high and low are. Then we make this move up, consolidate, break above. So now this is our new high. So again, another great sign from the bulls. Bears had a chance to hold this as resistance. They didn't. Bulls, great big green candle, good sign. All right, then we start pulling back. Still overall from our bullish perspective. So from the start of this day to our peak, right? Did this drop more than 50%? Nope. All right, so good sign. And around this time is when I initiated a long position. So around here, I initiated long position because I expected this zone right here, previous resistance, to turn into support. So I started along there. So you can see here, I initiated a long position there. And I'm not going to go through every single execution. That would just take up too much time. But basically, I was going long in this area. Why was I doing that? Very simple. I expected this to hold. It did initially, but I was just in with one contract, which, again, just a quick reminder, if you're trading micro, E-mini, S&P futures on Tradeovate, the margin is $50. So you need to have $50 in your account to be able to hold one of those contracts. So even for a $300 account, which is a really small account, $50 isn't that much. So going in with one contract isn't, it's not like I'm going all in, right? So I was okay with it kind of dropping below here. I expected this pivot point here to hold, which it did. So I ended up adding another contract here, which that execution itself was poor. Like if I'm reviewing this trade, this was a poor execution. It was premature. I should have waited a little bit. Let me switch over to the 1 minute to show you why I think it's a poor execution. A better execution would have been to wait for this to start reversing, to start kind of holding as support, which I guess you can say here we had a green candle, but it was a wick candle, so it's not really that strong. So we ended up moving lower, but like you guys can see here, we held this level. So we come up to this zone. Now it holds as resistance, so now it's playing against us. Originally I expected it to hold as support. It didn't. We came below, and now it's acting as resistance. So not the most ideal sign. We came down. At this point, I was getting ready to stop out because at this point, I think I added another contract. So we had 3 contracts at this point, but we ended up coming down. But this candle is unable to close below this zone. So we stayed in the trade, and then we came back up, retested this zone, kind of struggled, but eventually broke out. And then we started seeing some very, very nice bullish momentum going into CPI. And that's eventually where we take our profits. So you can, if you want to analyze these executions, you can go ahead and do that. A lot of them were just scalps and then playing around with this range. But then eventually we get the clean move. Alright, so around this time I go to, so what I was trying to do was, it was like 1 a.m. and I'm like, alright, well CPI is at 5:30, so might as well just stay up and that way I don't miss it. But around 3 a.m. I got way too tired, so I just ended up crashing. But I had my orders out there, so at this point when I went to sleep, I was holding 2 contracts. And I had my take profit set right here, right above this pivot right here. That was for my take profit. So right here, this candle is probably where I got executed to sell that position. And then I had 2 trailing stop losses set just below the zone right here. So when I went to sleep, I was around here. I set the 2 trailing stop losses that got triggered. So at this point, I was holding 1 contract still. I had 2 stop losses and no take profit orders, right? So just 2 trailing stop losses. So then as price continues higher, we get this initial CPI reaction. The trailing stops come all the way up here, and I get stopped out for a nice $100 profit, 107.50 cents profit here. My entry was 3,989, and I got executed to sell at 4,011. So a nice trade there. And then the other trailing stop triggered. So at this point, I was short. I took profits on 1 contract long, and I reversed to go short. But again, I was asleep, and my alarm, I forgot to change it to set it before CPI, because I wasn't planning on crashing at 3 a.m. I thought I was gonna just stay awake and, you know, be awake for CPI, but I wasn't. So my regular alarm, is set at 6 a.m. So this is when I woke up and I executed it. But look what we missed out on. I was short one contract here. We could have caught this move down here. It would have been perfect. We would have caught the move up and the move down. But I ended up waking up late at 6 a.m. And so when I woke up, I'm just like, I'm just going to cut it, because I wasn't even expecting to be short one contract, right? So I ended up closing that, and then that was also kind of a mistake because we ended up dropping below, and I could have ended up basically catching this move again. So rookie mistake there, but overall we came out on top. The count is now sitting at 425 and 52 cents. So we hit our goal, which was to reach $400 in this episode. So great stuff there. And hopefully I did a good enough job explaining why I was leaning bullish going into CPI. And yeah, that's basically what I got for you guys today. Making great progress on the account. We're now more than 40% of the way there to our ultimate goal of hitting $1,000 on the account. And that just goes to show you guys, right, that like you don't need a lot of money to grow account. You could grow account from basically starting at any point. We started this account at 150, and we've now we've more than doubled the account. And yeah, just on that one trade, this was just one contract, we made $100. And again, the margin requirement for each E-mini S&P contract is $50. So if this was like an option play, this was basically a 200% winner. And this is a tiny account that we're trading here. We're trading a sub $1,000 account. If this account was $3,000, so 10 times what it was at the start of this video, we would have made 10 times the profit. So $100 win would have been $1,000 win in a single day, which is the power of trading for you guys. So yeah, hopefully this series helps motivate you guys, for those of you guys starting out with smaller accounts, and show you guys that it's definitely possible to do it. And hopefully this series helps you guys with that stuff. But yeah, don't want to make this video too long. Thank you guys so much for watching the video. Next episode 5, shouldn't take 4 weeks to upload. It should be out next week. So be on the lookout for that. Also, quick shout out to my Twitter @0nets. I've been posting my daily trade of the day, so definitely make sure to go check that out. Don't want to miss out on that. And yeah, other than that, I'll catch you guys in episode 5, hopefully next week. Other than that, it's been me, Zero, and I'm out. Peace.